This is Crypto Update Chris with your daily update. If you enjoy this content, make sure to like and subscribe. Now let's get into it. Today we're diving into two major stories that bring Bitcoin and the Federal Reserve into sharp focus. First, Federal Reserve Chair Jerome Powell made a notable comment during a press briefing stating that the Fed is not allowed to own Bitcoin. This statement comes amidst growing speculation about Bitcoin's role in a potential U.S. strategic reserve, a concept that's been championed by the incoming Trump administration. Powell's remark highlights the long-standing divide between traditional central banking principles and the growing interest in cryptocurrencies. Central banks typically don't own speculative assets, and Bitcoin's volatility makes it an unlikely candidate under the Fed's current framework. However, this conversation takes on a different tone when you consider Trump's push for Bitcoin to play a larger role in U.S. financial strategy. The idea of a Bitcoin reserve might seem far-fetched to some, but it underscores how Bitcoin has evolved from a fringe asset to a serious topic in policy discussions. This isn't just about the U.S. Globally, we're seeing countries reevaluate their positions on cryptocurrencies as they try to balance innovation with stability. Meanwhile, the Fed also announced a 25 basis point interest rate cut, bringing rates down as part of an effort to support the economy. While this decision is generally seen as bullish for risk assets, Bitcoin's price dipped slightly below $104,000 following the announcement. The drop could be attributed to the Fed's accompanying hawkish tone, signaling that this might not be the start of a sustained rate-cutting cycle. Investors often interpret a cautious Fed as a signal to temper expectations, which can create short-term headwinds for Bitcoin. These two stories reveal a fascinating dynamic. On one hand, we have traditional institutions like the Fed sticking to their conservative playbook, limiting their engagement with Bitcoin. On the other hand, political figures and private sectors are pushing for broader adoption, seeing Bitcoin as a potential hedge or strategic asset. The rate cut itself reflects the Fed's focus on traditional economic levers, while Bitcoin's price reaction shows how intertwined it has become with macroeconomic policy. What stands out is the growing intersection of traditional monetary policy and the cryptocurrency market. Bitcoin's status as a hedge against inflation and a store of value continues to attract attention, but its volatility and lack of centralization challenge its fit within existing frameworks. The differing perspectives between Powell's Fed and Trump's advocacy for a Bitcoin reserve illustrate the broader debate about cryptocurrency's place in modern finance. As always, nothing discussed here should be considered financial advice. Make sure to do your own research and consult with a financial advisor before making any investment decisions. Thanks for tuning in, and I'll catch you in the next update.